As we prepare to introduce our panel, our upcoming panel, who will speak to us on Agile Banking for Beyond, I want to encourage everyone to really listen in. There is going to be quite a lot of sharing. I was particularly excited having spoken with these gentlemen and learning some of their deep insights and perhaps even some industry secrets into what is really leading to their success. I have been in industry, as most of you know, for over 2 decades, and to say that the developments that are happening right now are happening at lightning speed would be no exaggeration, and I'm sure that you industry leaders and those of you in the audience today would agree. From the advent of mobile money wallets to central bank digital currencies, and of course the numerous fintech startups, banking is ever evolving. To discuss this reality and how to better position for the future, I am pleased to introduce this esteemed panel of seasoned industry professionals. Mr. Lyndon Guiseppi is the CEO and Director of Caribbean Investment Holdings Limited and currently chairs the board of its 2 major subsidiaries, the Belize Bank Limited and Belize Bank International Limited. He has over 28 years of involvement in the financial services sector. Also with us today, Mr. Septimus Bob Blake, who is the CEO of National Commercial Bank of Jamaica Limited. He brings to the panel over 20 years progressive experience within the industry and is the current president of the Jamaica Bankers Association. And again, we are joined by Mr. Nigel Baptiste, a career banker for the past 30 years, and he holds the position of President and CEO of Republic Financial Holdings Limited and Managing Director of Republic Bank Limited. Gentlemen, thank you so much for joining us today. Wonderful. So it really is an honor for me to be able to sit with the 3 of you this morning and discuss some of the industry trends that we are now experiencing. So I know that we have perhaps a few presentations ready. Lyndon, let's begin with you. Let's talk a little bit about what you see as answering the call for being an agile and ever-ready industry.
Good morning, Wendy. Good morning, colleagues, and good morning to the listening audience. I want to thank you for the opportunity to be part of CAB's annual conference. I miss the fellowship that we normally have in various jurisdictions, but nonetheless, we're here this morning and hopefully we can add to the debate by sharing some insights on this very important and innovative concept of agile banking. Wendy, I hope you'd allow me to begin this morning with a very short anecdote in terms of perhaps what agile banking is not. I mean, if I may start there. About 20 years ago, I had the honor of being part of a group of individuals who sponsored a major IT initiative at a previous bank that I worked for in another country, I might add. That project and that proposal, which was presented to the board, envisaged a 2.5-year implementation. For the large project, we were going to spend about $50 million US. We were changing out the entire core banking system of the organization. By the time I left the organization 5 years later, the project was still ongoing. We had perhaps spent close to $100 million at that time. And when the project was finally implemented, I wouldn't say it was a complete disaster, but there were significant problems that occurred with customers' accounts not being debited properly. Funds were from one account was going to another account. In some of the branches in the islands, we had people lining up outside the branches for hours to have access to their accounts. And there was no end of issues. Obviously, what we experienced there was significant reputational risk at that time. If we were to implement an IT project today in the same manner in which I just described, I dare say that by the time that project would be completed, our market share would be significantly reduced, and a fintech perhaps would have, supplanted us, because of what is happening in the industry today. When I think of agile banking, Wendy, I think there are 3 concepts that immediately come to mind for me. The first concept is, do not let the perfect be the enemy of the good. That's something I think about when I think about agile banking. Do not let the perfect be the enemy of the good. The other concept that I think about when I think of agile banking is fail fast and learn fast. You know, fail fast and learn fast. Get things done as quickly as possible, and if you make a mistake, learn it and move on. And the third concept would be just-in-time delivery of products and services for customers, obviously. For those who are unfamiliar with the term agile banking, because it's a term that only recently entered the literature, agile development is something that is normally associated with IT projects, and it refers to the iterative process of building and testing products rather than waiting until the completed project is delivered to be really tested. So as you move along, you develop the project in a modular fashion so that you do not wait until the full implementation is completed before you get to the end of the exercise to test it. And with agile banking, there has been another concept which has been introduced into the literature, which is the concept of a minimum viable product. A minimum viable product. Now, what is a minimum viable product? I mean, human nature is such that when we build something, whether a house or a car or boat, we want to build something with everything in mind. I mean, I remember when I was building my own home, you wanted every room that you could think about, even rooms that you were not going to be using for the next 5 years. You wanted those rooms to be built immediately. Well, the whole concept of a minimum viable product spins that on its head. And it asks the question, what is the most fundamental product do we need at this point in time to engage the customer, leaving those other ancillary products and services that we would like to introduce to be introduced at a further point in time, at a later date? Because you do not want to, build a castle if really what you need is a simple house with a moat around it. So a minimum viable product is the type of product which gets the customer engagement and then allows you, right, to use that as a hook to add on other products onto it. A good example, to demonstrate what I'm speaking about is the company Venmo. I mean, we're all familiar with Venmo. Venmo is a fintech app that we all use to pay for goods and services, to split bills at restaurants, to send payments around the world. But when Venmo was launched in 2009, Venmo has millions of customers today. They launched with basically one product, which was peer-to-peer transfers. They did nothing else. But as they got their subscriber base up, they were then able to add on to that peer-to-peer initiative various other products and services, so that today Venmo offers a plethora of products and services, even though it started as a one-trick pony. Okay? We may want to ask ourselves as well, what are the major catalysts today that are forcing banks to adopt agility and to adopt an agile methodology? I think there are basically three catalysts that are pushing us in that direction. The first catalyst, I would say, is the fact that technology is changing at such a rapid pace that banks could no longer afford to take 3, 4, and 5 years to implement not just IT projects, but any projects. So they are forced now to come up with more creative ways and more agile ways and quicker ways of implementing new products and services, whether it's IT related or not. The second catalyst for pushing banks in the direction of agility is the fact that you now have this phenomena of fintechs who have invaded the industry and who are encroaching on territory which was previously the exclusive domains of banks. And banks are now forced to retrieve ground and to respond to these fintechs. And as a result of that, they are again going in the direction of agility and agile banking, because the fintechs are not hamstrung by the infrastructure and by the regulatory framework which the banks are, and therefore they're in a position to do things much faster than banks can do. So this is kind of pushing banks to become a little more flexible in the way in which they approach things. I think the third thing that is driving banks in this direction is the fact that over the years, banks have become very siloed in the way in which they operate, and agility allows them to sort of simplify the process and do things in a much more streamlined fashion. Yeah. So what concrete decisions or what concrete things can be done to make an organization or to make a bank become more agile? Speaking from my own personal experience here, I mean, we have done a couple of things which I think can speak to that issue. In the last couple of years, we decided to move away from the traditional organizational structure, and but not move away from it, to add to it. So even though it remains, we have created groups called innovation working groups, and these groups comprise essentially of young tech-savvy individuals from across the organization. These are individuals who are not necessarily senior in rank in the organizations, but they're certainly much more tech-savvy and internet-savvy than I or a lot of other executives are. And we've asked them to look at the organization and how the organization functions, and to come up with ways and ideas in getting things done faster, and in coming up with new ideas that would sort of appeal to millennials and to younger people, so that products and services, speak more directly to the growing mass of young people who presently are our customer base. The other issue we've done at the Belize Bank, to sort of facilitate the whole concept of agility, is we have adopted something which is called a mobile-first strategy. And what do I mean by the mobile-first strategy? More often than not, when banks and organizations develop web-based applications, historically, they develop those web-based applications fundamentally with the laptop in mind. So when you develop an app, for instance, certainly this is how we operated in the past. We developed the app on the basis that it's going to be used on a laptop. But more and more, we're seeing that the primary medium of communication between our customers and ourselves is not a laptop, it's a phone. So we have moved away from designing our apps and our applications for the laptop, and we start by designing them principally to be used on a phone. I don't know how many of you will notice that if you have an app, for a bank app, and you try to use it on your phone, it looks a bit awkward and it doesn't have the same functionality. So we have sort of flipped that concept on its head, recognizing that most of our customers are not hardly ever using laptops, but they're now using their phones. So we are designing stuff with the phone in mind, and then making the adaptation so that it can be used on the computer as a secondary function, And that has helped in our engagement with our customers. The third point I would like to sort of share this morning before I give the floor to my other colleagues is, more recently, we have actually launched a mobile wallet. It's called eCash. And what led us to the development and the launch of that mobile wallet? We recognized that in Belize, you had a number of features that did not lend itself to traditional banking. Belize is almost 9,000 square miles, and it has a population of 400,000. So there's a very low density population issue in Belize. And most people live at least 50 to 100 miles away from the nearest bank or the nearest ATM. So banking in Belize has been very difficult for people who live in rural communities. So we needed to come up with a solution which afforded individuals who were not close to a bank to be able to bank nonetheless. The other feature that we see in Belize a lot is there's about 40,000 individuals in Belize who are unbanked, who will never get a bank account. These are individuals who work primarily in the south of the country, on the farms. They are migrant workers that come across the border from Guatemala or El Salvador. And for various reasons, whether it is they don't have proper identification card or they're illiterate or whatever, they will never have a bank account, yet they're receiving cash. So we needed to find a mechanism to bring them into the banking arena. And the third reason is the fact that there's a large young population who are unable to access banking facilities because they're too young. In Belize, you need to be at least 18 years old to open a bank account. So against that backdrop, and against the fact that there have been a high penetration for mobile phones in Belize, we decided that we were going to launch our mobile wallet, which we did about 3 months ago. And I'm happy to report that, within the first 2 weeks, we had 35,000 subscribers. We had done 17,000 P2P transactions. We had 850 merchants who had signed up on the app. But here again, we use the concept of mobile bank, agile banking, because what we did when we launched the app, we launched it with two products: P2P payments or P2P transfers and QR code payments. But as we develop the app, we're going to put onto that app the whole concept of geolocation. We're going to put gift cards. We're going to allow customers to split bills. We're going to be able to pay utility bills. But we didn't put all of that into the product at the outset. we decided what are the most important features that customers would need. We put those features in. We got those customers hooked on it. We got our 25,000 subscribers onto the platform. And now that we have a base to work with, we are adding on those other features. And I think that really is the essence of, for me certainly, what agility is about. Not trying to be everything to everybody, but putting something in place that can attract a large enough clientele, and then using that to build out other aspects, rather than trying to wait 3 years to get all of these things done and then realize you got it wrong. So I would leave it there, and I would hope to have a discussion further with you and the panelists and others on this topic of agile banking.
Absolutely. Thank you so much for that, Lyndon. I certainly took some notes. I think based on what you're saying, there will be a lot of discourse after, but it's one of the questions that remains in my mind is from our previous discussion in terms of customer engagement, customer experience, and digitization. So that's just my little teaser for what's coming in my mind as far as what you're doing, Lyndon, and how do you marry the two. Mr. Blake Septimus, I think that we will invite you now for your brief presentation. Tell us a little bit about what you're doing and how that continues to propel you forward in industry.
Hey, good morning. And thank you for having me. I'm grateful to be able to ask to participate in this panel discussion, to share my own experience, but more importantly, to learn from the experiences of my fellow panelists and the delegates here. So excited to be here. So I'd like to begin by making a couple of statements that, we're living in an uncertain world, and there are many changes which are taking place. But what do we know really? So I believe that we know that the COVID-19 pandemic has reset the competitive picture for all competitors at all levels, everywhere. So whether we're an individual, a firm, or a country, we know that we're living in a competitive world. So how do we make sense of the future? How do we reimagine our industry, which, as I believe Wendy said earlier, it is being rapidly remade at electron speed. So how do we make the better decisions in this environment? How do we prosper and thrive in this environment? And so to thrive, I believe we need to, first of all, we have to survive this pandemic period. And secondly, we have to improve our ability to compete in a post-pandemic world. So the capacity to sustain our business during this economic stricture, which started out actually as a health crisis, which has now morphed into an economic crisis. So the capacity to sustain our business, I believe, is the first test. And then the second test, which is probably less obvious, is how we're able during this pandemic to improve the ability of our businesses to compete in the post-pandemic world. And so if you think about it, we start with the customer and the customer's priorities. So to be successful, us as financial institutions, I believe, will need to put the customer first or at the center of every strategy. The second thing I think as institutions, we need to remain flexible to adapt to evolving business models. And the third component, I believe, is that, as institutions, we need to embrace emerging technology. And Lyndon spoke earlier about the principle of Agile. What does Agile mean to me? Agile means to me, very simply, delivering value fast. And if we start with the customer needs as financial service providers, really and truly, I'd like to provoke a thought or some thoughts that, financial needs have not really changed over time. So whether it's the need to save, the need to borrow, the need to invest, the need to transfer money, the need to consume, the need to protect assets, those needs have not really changed over time. What seems to me to have changed is how these products or services or the solutions to these needs are, one, how they are designed, how they are manufactured or provisioned, and how they are consumed. And that, to my mind, is where a lot of the changes have taken place. And those changes, to my mind, are driven by technology. And three components, three macro themes that we're seeing are: one, connectivity; two, mobility; and three, speed. So I think the confluence of those things is what has brought about the change. And that is where the competition, we're seeing the competition. So as businesses, how do we develop, that technology infrastructure that can allow us to adopt and adapt to these new engagement models? How do we make our businesses resilient? How do we transform the businesses to absorb future shocks better? How do we put our operating models in such a state that we have the flexibility to respond to whatever change will occur? So if you notice, I'm asking these questions to provoke the thought, but also asking these questions of myself, is as we think about, a flexible and adaptable and a responsive business model. How do we align the workforce, and the workspace? And yes, I deliberately said the workspace because work has moved from a place to a space, and that is one of the significant shifts which has taken place, as a result of this pandemic. And then I'm asking myself some other questions around, what bold actions can we take? Of course, backed by a solid understanding of risk. So in essence, businesses that are focused on the future are configuring their operating models in which every component of the organization, so from the front, we call the front the originating unit, so whether it's our retail or corporate or commercial businesses, to our technology, to our risk, to our marketing, to our operations, sales, how are we working collectively to deliver against the customer expectations or customer outcomes, which are rapidly changing? And in summary, for this part of the session, in my view, opportunities are everywhere. And I start with opportunities. Challenges as well. And we know these challenges: reduced revenues, rising costs per customer, macroeconomic headwinds. We know what they are, but there are opportunities. And to my mind, it comes down to what are our priorities and choices, and how do we, deploy. And I'm going to use the MVP, the minimum, Lyndon would have introduced it, but I'm going to use it slightly in another way. How do we deploy the appropriate minimum viable operating model for our organization, your organization, and the markets in which we exist? And, to sum up all of that, we start with the customer priority. Thank you.
Wow, thank you so much. This is the panel that we had to keep an eye on, because this is where it all happens. And I cannot tell you how honored I am to be sitting with the three of you gentlemen today as you share your best practices. Nigel, no pressure, but here you go up last following these two gentlemen.
So good morning, Wendy, and good morning to my fellow panelists, Lyndon and Septimus. The first time I'm meeting Septimus, so very nice to meet you. And good morning to all of your viewers. You know, the topic this morning, when we talk about agile banking, and coming after Lyndon and Septimus is no easy task, especially when I have some slightly different views, right, to what Lyndon and Septimus might have shared. So when I started thinking for this presentation and was kind of formulating my thoughts around Agile and Agile banking, I realized that it actually started in the thought process. And that Agile banking really and truly is a mindset. And quite frankly, has nothing to do, in my opinion, with technology. Okay? It begins long before technology came into the picture as an enabler. And at Republic Bank, I think we still have some ways to go to get this whole agility inside of our mindset. And I hope that as we develop during the course of today's discussion, what are some of the things that need to be done to get there? Because people don't necessarily come in with an agile mindset. And what is an agile mindset? An agile mindset, I think Septimus made reference to it, really begins with flexibility. And when you talk flexibility in a banking environment, people become very, very, very worried. Because you know, we are very accustomed, and I am very accustomed, so I have my own adjusting to do. We are very accustomed to frameworks. We are very accustomed to controls. We are very accustomed to policies being put in place and being adhered to. Policies against which your internal audit department, your compliance department, your external audit department ticks all of the boxes, checks and makes sure that things are done the way they are laid out to do. In fact, staff expect a sufficient amount of guidance as to exactly what is expected of them and what they are supposed to do. So there's a lot of rigidity when it comes to banking. I think that is where technology and the fintechs have kind of come in. And so people think that it's the fintech, but it's not so much the fintech. It is really that, you know, we in banking, and if most of your viewers are like me, dyed-in-the-wool kind of bankers, we are accustomed to framework and things being done in a certain manner. And agility turns all of that upside down, right? Because you need to be flexible. We need to have a different appreciation of risk. We have to change our risk appetite because things that we are accustomed to doing, we might now have to do them differently. If, as Septimus indicated and Lyndon indicated, we have to put the customer first. The customer, quite frankly, has not always been first when it comes to what we have tended to do historically in banking. And again, that is where the fintechs and some of the other individuals are able to get the upper hand on us. Because we have a concern for the customers. We all espouse a customer-driven model, but it's really a compliance-driven model with the customer inside of it. And that is one of our challenges if we have to transition to an agile sort of a banking perspective. And we in the banking sector, we are the best placed to do it. I mean, if we really flip this thing and we put the customers first, and at Republic and in the Republic group, we are struggling to do that. Okay, it's what we want, it's our ambition, it's our vision, right, for ourselves. But you know, you have 7,000 staff members within this group, and everybody has to be there. And we have systems in place which are at odds with that vision and that statement and that objective. Because yes, we want to put the customers first, but hey, make sure that how you comply with this particular guideline, which in and of itself might prevent you from being able to put the customer first because of the information that you want. So our staff have a conflict that they on a daily basis are battling with. So we have to deal with that. Okay, and in the Republic Bank group, I can't speak for Lyndon and Septimus. It is one of the big challenges that we have. But we are best placed to do it because we have the data. We have the data that all of the fintech and all of those people have been acquiring and using all sort of different methodologies, advertising and promotions and what have you, right? To be able to get this data and use this data to put the customer first. We have it. We have always had it. We might not be able to access it the way that we would like to access it because we didn't grow up that way. But the day one of us in the big bank arena find a way to optimize the use of that data, I don't think there will be a fintech that will be able to compete. And this is why I say technology is the enabler. And if we put the customer first and we focus on how we use the data we already have, there's so much more that we could accomplish. And Republic Bank is seeking to do that. We are looking to pull down a lot of and it's starting with the risk. We are looking to dissect, the risks that we say we want to take and the risk that we actually take. And so we are starting there. We are using the technology, right, to really enable us to get what we think needs to be done, right? We are revising the entry requirements for new people because it has to begin at some point in time, and even if somebody like myself, could never get there, I won't be here forever. And so maybe the people coming after me will have that different mindset, but they'll only have that different mindset if I hire for that. So your employment practice, okay, your hiring practice also needs to change. So to get to that agile banking, the technology, yes, is very important, and we could talk about some of the things that the bank is doing from technology. I mean, where I differ a little bit from Lyndon. I mean, I understand what Lyndon is saying about fail fast, learn fast. I believe in that completely. I'm not so sure about the minimum viable product part, though. Okay, because I think the expectation of our clients is a little bit different. And they're actually looking, and it might be the same MVP, but not minimum viable product. They were looking for the maximum value product. And so the minimum viable product might get us out the door, but unless we could transition that minimum viable product to a maximum value product in a fairly short space of time, right, we are leaving ourselves vulnerable to somebody else. Whether that person is a fintech company or just another rival who's doing something a little bit better than us. So maybe we start there, and that's what Lyndon is saying, and we just need to transition quickly to a maximum value one, but we certainly need to get there quite fast. And I mean, I just pull out 5 other bullet points that I think are important, and we could talk about it during today's session. I think the question about personalization, is very closely aligned to putting the customers first. I mean, the point that both Lyndon and Septimus made about mobility, that's very, very important, okay? Because everybody now, and I think it's closely aligned to the question of speed, because people really want to do it where they are and not where you would like them to be. So mobility is very, very important for that. I think one of the aspects or one of the features of this pandemic crisis was it accelerated the technology adoption. People who maybe would have taken a little bit longer to reach a certain point have now reached that point a lot faster. But there's been a downside to that. because it has also increased the cybersecurity consideration that we have to put in place. So that is something that, as well as bankers, that we need to kind of always keep in front of us. And I think the final point is there are 3 I's that agility has put to the forefront. I think one is innovation, the other one is information, and the third one is integration. And if we want to be successful, agile bankers, we have to be able, right, to pull those 3 together in some sort of cohesive manner. So Wendy, I'll stop there and would welcome discussions.
Yeah, this is one of the best problems that a moderator can have, right? To have a panel like this and we have, a couple maybe not opposing but not quite aligned perspectives. While I think the great thing is it sounds like our agenda for conference really is mapped to what our banks need to be thinking about. There are a couple questions floating around in my head, and I always feel really good when I've done something like this, when I have people speaking to me, right? There's not enough pens available to me. But let's start with you, Lyndon. I know that Nigel had something of an opposing view. So what is your thought on that? You're muted. Sorry, Lyndon. Yeah. Okay.
Are you hearing me, Wendy? Okay. I was just saying, I really appreciated both presentations from Nigel and Septimus because, as you said, they brought different aspects of the whole concept of agility to the table, some opposing, some sort of complementary. And I think that is ideal in a panel discussion like this. Nigel spoke to the issue of the fact that agility is not related to technology. And I wholeheartedly endorse that. It's really a cultural shift. Where it's a mindset issue. I buy that, I agree with it. But I also recognize that the rigidity that we find in banks today is primarily a function of the regulatory framework that banks find themselves in. It is not simply that tomorrow a bank can decide to become a fintech because the regulatory framework that governs banks is fundamentally different than the regulatory framework that governs fintechs. So for instance, we have a regulator called the central bank, and if you decide to do things in a particular way, there's a protocol involved in terms of addressing that. We are dealing with depositors' funds, and therefore, banks have a license to print money, and therefore, for that privilege, that comes with responsibility. So there are legitimate reasons why banks have been, behaved in a manner in which they behave, which is less agile because of this sort of overarching architecture that banks find themselves in. So the fintechs, they have an advantage at this point until and unless there emerges a sort of regulatory architecture that governs them in a similar way to the banks. So that while banks can be agile and while banks are becoming more agile, there is that sort of dissonance between what fintechs are allowed to do and what banks are allowed to do. But I agree with the point that banks have an inherent advantage in terms of the information that we've had. I mean, we have troves of information that we can use that fintechs will pay, an arm and a leg to buy to get. So from that perspective, I'm on all fours with Nigel, but I think the idea that banks can sort of spin on a dime and sort of get out of this box, I'm not sure we're there yet, because you have to understand it's decades of behavior, decades of patterns of behavior and a regulatory architecture that has brought us to this particular point. With respect to the minimum viable project, Nigel, I think your point, your elaboration is correct in that what I'm not saying is that we stick with this initial minimum viable product. My point is this: a lot of times we spend an additional year or 2 years to get 2 or 3 different aspects of a product right before we launch, when in fact we can actually launch with something that is viable, the customers will adopt. And then once we have done that and we have the subscriber base, we move quickly and rapidly to sort of launch the other sort of bells and whistles that go with that product. But if you had to sacrifice a year or 18 months to get everything right, or to launch something, a year earlier, which a customer base would accept, my argument will always be, let's go with the initial launch. I mean, I go back to my initial anecdote, which is not an anecdote. We spent 5 years to implement a core banking system, only to find out at the end of that 5 years that there were problems with the customers that we could have addressed had we done it in a modular fashion. So the minimum viable project concept is really about having an understanding of what is perhaps the most fundamental aspect of this product that the customers desire, getting that out there as quickly as possible, getting an adoption rate high, and then moving quickly to leverage that to sort of introduce, the bells and the whistles.
Okay, Septimus, I read that body language. I saw that huge smile. I give the mic over to you.
Yes, I wanted to jump in to say on a couple of things. One, I think that Nigel is onto two things, because I don't think we're at cross purposes. I think we are arrived at the same, let me say, destination or North Star, which at the end of the day is the customer outcome. I think where we have maybe slightly differing views is in the approach. So the outcome, the customer outcome, which is the North Star, is fixed and it's firm. But the route may and it may be flexible. But Nigel went on to point out two things. One, around how we have behaved over time and the mindset. And I think that's fundamental to the whole discussion. So the way we have looked at it at NCB is in two themes. One is the ability to win. And the ability to win has in, our technology capabilities, how we are organized or configured to do work. What capabilities do we have in terms of process and policies, etc., etc. But more importantly, the other component, which is the mindset issue, is what I call the capacity or the ability to change. And I think that for us in banking is one of the most fundamental pieces. And here at NCB, we focus on that a lot, because these are some significant, let me call them behavioral shifts. We're talking about the culture, and Nigel spoke about, we are, as bankers, I'm not a banker, but as bankers, we are very hierarchical, right? And in this environment, we talk about Agile, we're talking about teams. And we're very siloed in banking, but we need to move to cross-functional teams, right? The other thing as well in banking is that hierarchy, the leader or the manager or whoever makes the decisions. And so you have to move away from a space where you are making the decisions to where you are empowering people or creating the environment to make decisions. And so so you're moving from, we're, as an example, our focus is how are we performing against plan, right? And the shift is what we call, what is the value which is delivered, moving from the hierarchical to the empowerment of teams, moving from hierarchical again to cross-function, and pushing decision-making down to the individual, wherever they are, who is either one, closest to the customer or closest to the data. That is a massive mindset shift. And it's a culture eat strategy for breakfast. You could get, you could buy all of the capabilities that you need if you can afford it. But that behavioral shift requires significant effort and time, right? So we I would say over the last 3-4 years have been focused on what we call some leadership behaviors, because that's where we start. One of them is around, I give you a few of them. One of them is around resilience, right? And that is simply the ability to withstand adversity and to bounce back, from difficult issues, and how to confront them when faced with ambiguity. The other one that we have been, focusing on is accountability, meaning, an obligation to explain, to justify, but to take responsibility for outcomes. We talk about the customer obsession, and we have a compliance culture in banking. Full stop. KYC in banking, and let's be brutally frank, we believe KYC is a compliance matter and it's burdensome and it's, this is just a burden. But KYC, knowing your customer, leads to understanding your customer. And only when you understand your customer, you know your customer, can you understand what are their needs, met or unmet, and provide the solutions for them. Right? So, that's a behavioral shift for us. And then the last thing that I'd like to say on that is around, courage. Right? And as leaders, and we're learning, we're learning. And it's that ability to tackle difficult topics, difficult situations, and difficult people. Because culture is about people and behaviors and practices which are ingrained. And we all have our own, idiosyncrasies and behaviors which die hard. I mean, they don't go away. And so that's a lot of focus. But to get more specific in terms of, some of the things that we can do or we have the opportunity to do in terms of capabilities. So we spoke about the customer obsession before, but there's an ability or an opportunity to use technology to define and create the customer experiences that we need. The other thing which we have learned, and COVID-19 has precipitated that, is you have to design for scale in this digital world. You must, because so what that means is all of your back-end processes need to be automated and straight through. The other area that we're focusing on is, and I believe Nigel and Lyndon spoke it, is around the opportunity or the ability to use data and analytics to understand and respond to our customers. I mean, in the way we tend to do it in banking is that we use the data just for results tracking, but there's an opportunity to use the data and analytics to understand, but more importantly, respond to our customers. We also need to focus on that need for speed. And our customer needs are changing so rapidly, and we need to respond to it in today's world. So if you have skill, if you have data, if you have and the analytics, if you have a need for speed, it allows you to confront and respond. And then last but not least, and I think both my fellow panelists spoke about it, is we have to have a deep understanding of risk, and cybersecurity in particular, because digital is not a riskless space, but we just need to be vigilant. I'll leave that for the time being. I will have a few other things to say on what we have done with the operating model and the role of technology.
Fantastic. Thank you so much for that insight, Septimus. Thank you for sharing. I could listen to the three of you for the rest of the day, and I'm sure that our audience feels exactly the same way. As a matter of fact, that's the feedback that I've been getting. But we also have some questions coming in for you. And hopefully I can get one of them in as well. So can we begin to post the questions so everyone has a sense of what's being asked of the panel this morning? Okay, so the first question up for you, what are your perspectives on the increased prevalence of fintech startups within the industry? And are we ready to work with individuals in this arena? Nigel, let me start with you.
I don't really have any perspective on that. I think that the fintechs have the advantage, and Lyndon alluded to it, right? In the sense that they don't have the same regulatory constraints that the financial institutions have. But I think that is a fleeting advantage, and so they need to exploit it while they do have it. I think it's good, because what the fintechs are doing may be pointing us in directions that we maybe thought we needed to go, but had not quite had, and to use Septimus's word, didn't quite have the courage to go that way. Insofar as working with them is concerned, certainly from I think any bank's perspective, we have no difficulty in working with them. I think they probably might find us more of an albatross than anything else, because we bring our compliance requirements and everything else, right, to the equation, where they just want to kind of move as quickly as possible. I do believe there is scope for partnership between the established financial institutions and the fintech, and certainly in certain spaces, there probably the more scope for it. I think there's scope when it comes to RegTech, because there are things that we could do. The same KYC, which is a major issue, and you find that all the financial institutions in one territory have to more or less replicate what another financial institution is doing, because everybody's information is kind of siloized, even if we share a common customer. That I think is a space that there's something there where fintech could play a role, and all of the financial institutions, the payment space as well, right? There's room there for all of the banks maybe to partner with someone. So I welcome it. I think it's good competition. Competition is always healthy. I believe there is scope for partnership, but there's also scope for us to do things that maybe we might be able to do a lot faster, because we already have the information that they are trying to get.
Is there any divergence of thought, thank you, Nigel, amongst the panel? Or do we all agree, at least in some measure, to Nigel's response? Lyndon.
I think with respect to the fintechs, I would caveat what Nigel said with the following. I think it depends, the ability of the fintech to penetrate or to supplant the traditional banks really depends, in my estimation, to a large extent on the issue of the size of the unbanked population. What I've found, and I've done some research on this, is that in jurisdictions where there's a large unbanked population, or where there are large segments of the population who are unable to find themselves within the ambit of the traditional banks, fintechs have been able to sort of leapfrog the banks in those jurisdictions. In the last 2 years, I've spent some time in East Africa looking at this. And you look at a place like Kenya, or a place like Zimbabwe or Uganda, where the fintechs there, like M-Pesa or EcoCash, they are actually larger than and more dominant than some of the big banks in those jurisdictions. And primarily, the reason primarily for that is because of the geography of these places, the literacy rates in some of these jurisdictions. But the primary driver seems to be that because a lot of these populations are unbanked, the fintechs are finding ways to onboard them in ways that banks traditionally have been unable to do so. So I think whether goes the fintechs vis-a-vis the banks is really going to be a function, to some extent, of that phenomenon. In terms of the collaboration between the banks and the fintechs, I think it's going to be inevitable that there is going to be collaboration, because even as we collaborate with our banking colleagues now, you're going to find more and more that there are products and services that the fintech can deliver much more expeditiously, cheaper, and which we can perhaps benefit from either by joining with them in some sort of formal arrangement, or, as I would imagine, buying into those fintechs. So what I see coming forward is banks actually merging with or acquiring some of the fintechs, because the banks are going to continue to be the ones with a significant capital who are able to sort of capitalize on these opportunities.
Okay. Can I advance a perspective?
Septimus, absolutely.
Sure. So the way I look at it is that, you know, banks are the intersection between finance and technology, and that has been so for a long, long time. So if you want to, you know, if you merge that, what you get is finance, technology, right? I think that you know, there is a space for you know, what we call the fintechs of today to sit down and eat lunch with the banks, rather than the narrative which used to persist was that the fintechs was going to eat the bank's lunch. There is a significant opportunity for fintechs and banks to sit down and have lunch together. And I say that to say that's been our interaction with, let me call them the technology players, because banks have been leveraging technology for a long, long time. You know, so we shouldn't see ourselves as, you know, banks and fintechs. You know, one of the things that we would have done at NCB is to, you know, sort of think about how we think about technology and some of the principles that come from what we call fintechs. And one, they're engineered for speed, they're engineered for flexibility, they're engineered for scalability, better customer experience. The experience is better, and, you know, continuous innovation, right? And so one of the things we look to say, all right, how do we, as an incumbent, a bank, traditional bank, how do we re-engineer our operations for flexibility, scalability, speed, great customer experience, continuous innovation, and stability, right? And so there are some important principles that we can take from, you know, a lot of our fintech, you know, the fintech providers. And let's face it, if we talk about fintech or big tech, the experience that I get from my Apple, my Amazon, my, you know, my Venmo, whatever the case may be, my banking experience cannot be, you know, vastly inferior to that. And so the approach is to, where do we cooperate? There are areas we compete and there are areas we cooperate, right? And so that's been our approach. How can, you know, fintechs, you know, support or enhance my ability to acquire customer, my ability to manufacture products, my ability to deliver an outstanding experience, my ability to, you know, to be flexible and scalable. And so the technology allows us to, you know, either commercialize a strategy, you know, or to integrate, you know, and that's another important area, because us in banks, we have to move away from the perspective that when we acquire a customer, it's an account. No, we have to think about it, that it has to be functional. So the purpose of the account is functional to, you know, to do transactions. But the experience, so, you know, that you have to think about the experience. And then thirdly, which I think is also important, is that we have to think about the ecosystem. And by that, I mean, when you acquire a customer, you don't just acquire an account. You acquire a customer with their entire ecosystem around them. And so how do you connect into that ecosystem? Their health, their entertainment, their education, their whatever the case may be. Technology and technology players allows us to make that integration. And so that's the perspective that I'd like to share. And And that's been NCB's approach.
Fantastic. Gentlemen, there are some other questions that I'm being prompted need to be answered by you. So pandemic aside, what would you consider to be the foremost 3 ways banking has changed in the last decade? Now, none of you look like you've been there for a decade, but when I read your bios, it says that you have. Unbelievable. But Nigel, why don't you give us a first crack at that one?
I've been here for a few decades, so I could safely answer that question. I mean, pandemic aside for sure. I mean, banking has changed. Number one, compliance. The compliance requirements in banking have, I would say, quite a factor, right? 5 times, 6 times, 7 times. It has multiplied over the last 10 years and continues to do so. So that has changed. Long before the pandemic, the second thing that changed significantly over the last 10 years was customer expectations. And this had nothing to do with fintech and anything else. It was just, it was more TV, right? TV and cable. So certainly in the Caribbean, customer expectations have changed dramatically over the last 10 years. And the third thing I would say that has changed over the last 10 years in a very significant way is society, culture, staff, right? That whole, and again, I will borrow a word from Septimus, that whole ecosystem that the banks operate in, it has changed, maybe not at the same pace as compliance or customer expectations, but it had at least had one complete cycle, right? But it is totally different in 2021 than it was in 2011.
Thank you, Nigel. Septimus, what about you?
Okay, so I endorse the matter of compliance, especially AML compliance. And we saw that emanating certainly from the emergence of the Patriot Act in the US. So that's one major area. So I agree with that. I'd also say distribution has changed dramatically, away from a primarily physical distribution to more digital distribution, and a shift has taken place. So as an example, in Jamaica, and certainly with my bank, I'd say that banking has moved from a place to a space. We're not at the end of the road yet, but as an example, only about 3 to 4% of our total customer transactions take place in the branches today. So between 95 and 97% of customer transactions take place on a digital channel. That's a massive shift. And so, so we think, for example, payments have shifted away from the branch almost completely. I think we're going to see the next wave is in terms of sales as well, and then the way we service customers we have seen a major shift in there. So that's distribution for me, and then in terms of the operations, how we work, what work is done, and where the work is done, and who does the work. I think that has shifted dramatically. So the role of the branches or distribution I would think, is one of the major shifts, and that has been accelerated. I would say by the COVID-19 pandemic.
Okay, so gentlemen, with less than 10 minutes to go, there is a question that I want to ask, but it is a fully loaded question, and I apologize, I'm jumping the queue because we do have quite a few other questions. As I listened to each of you present this morning, there were certain key things that stood out from all of your individual presentations. One, I heard succession. and that was really Septimus. Nigel, you spoke about mindset, and Lyndon, you kicked us off with banks are being forced to move in a particular direction. Truly, as I listened to you, I thought perhaps succession planning needs to be considered as a precursor to agility. And certainly, as Septimus would have indicated, the COVID pandemic was initially thought to be a health crisis, but certainly over the last 21 months roughly, we've seen that this really has been a spillover pandemic that has impacted every aspect of what we considered then to be our normal lives. How has the pandemic forced us to recognize our fragility as mortals and ensure that succession planning forms part of our everyday conversation? Lyndon, let's start with you.
In terms of succession planning, I think as I look, at the bank's future, what I'm seeing is that, and it's already began. I mean, the discussion this morning will speak to that. Is banks are becoming technology companies which provide, financial services. To me, the greatest change, going back to the original question that I've seen in the last 5 years, and in terms of the way in which banks have evolved, is that banks are becoming more data-driven, and they become more technology company providing financial services. I think 10 years from today, probably even sooner than that, you'd find that the senior hierarchy of banks across the region and elsewhere is going to be made up of more people with backgrounds in IT and electronics and microelectronics than really backgrounds that you find traditionally in the area of finance, accounting, auditing, etc. And I think as we plan, for the future in terms of putting in place successors and building a management cadre, I think the way in which we hire staff has to be looked at differently. I mean, when I was hired, many years ago, the top thing was, your ability to read and understand a balance sheet. I think now we take those things for granted. What you're going to need now in a top executive to run a financial organization is someone who has the full range and full gamut of those skills and services, but perhaps more importantly, someone who understands social media, someone who understands technology, someone who understands engineering, in a way which is fundamentally different to the way in which we operate now. So as I project forward, we are looking at, hiring. Nigel spoke to this in his opening remarks. We are looking at the way in which we hire because we see coming down the track an organization that is going to be primarily a technology organization providing financial services. And that needs to be factored in a very significant way and a very deliberate way in terms of the individuals who we hire to run our organizations.
Fantastic. Nigel, any thoughts from you? Thank you. Thank you so much, Lyndon.
Yeah, quite a few, Wendy, and you're quite correct when you say it is a very loaded question because the future is already upon us. The pandemic, in terms of your own human frailty, to my mind, it just sort of put everything into perspective. And so for people, people's priorities maybe got a little bit tweaked as a result of the pandemic. And you're seeing it now with the whole work from home and people wanted to have their own working space as opposed to where you would like them. So people's priorities have changed. People who were comfortable in spending 2 hours on the road in a traffic jam, no longer quite so comfortable. So everything has changed there. But from a succession point of view, and this is the loaded part of the question, from a succession point of view, and Lyndon is correct. The traditional, and I put that in brackets because I don't know if there ever were any traditional kind of skills, but the traditional skills are being maybe supplanted a little bit, right, by an increased need to focus, on people who have an innovative way of thinking, people who are more out of the box, right? People a little bit less conformist. And what is the loaded part of the question is that, that might not be the people who are currently in line for succession inside of the organizations. Because, over the last 10, 20 years, people have kind of grown up in organizations. They've moved into senior positions in the organization, and you weren't necessarily looking for those skills. So, and this is where the dilemma exists, because we're talking about hiring new people, and it's not just entry-level people, but some of them could be senior people. But you also have a cadre of individuals who have given their life, their soul, their careers to organizations. This is why I say it's a very loaded question, Wendy. And what happens? You know, is it that you find a way to transform those individuals to be more innovative, to be something maybe that the current leadership isn't, right? Because you recognize that that is what is needed. Is it that you bring people who could support them, who have those kind of skills, you know, and then those people, you know, think to themselves, well, why don't they just do it? So that is where it's a very, very loaded question. I think the innovation skill is going to be very big as people now hire for senior positions, or as people select for senior positions. They want people who are thinking differently. We basically are looking for people who might be at the complete 180 degree or 90 degree, whichever one is the correct one, the people that we were previously looking for and that we were previously promoting. You know, in one of your previous questions, you know, we talked about, and I think Septimus in responded, make reference to, you know, profitability and us being assessed on profitability, and you look at, and that still happens today. But we talk about a customer-driven organization. But I mean, none of us, I mean, I don't know what Lyndon and Septimus and their targets are, but you know, you do have customer experience on the target, but he probably carrying a 10% weighting. Okay? You're not going to get a big bonus if your customer experience score is through the roof, but your profitability number is down below. And that trickles down through the organization. So you've been hiring and promoting and people who, right, are driven by something different to what you necessarily think that the future leaders need to be driven by. And that is going to be the $1 million question that many of us have to answer, some sooner rather than later.
Absolutely, absolutely. Thank you so much for that. Septimus, I will give you 2 minutes to close us off this morning. Thank you.
Okay, on that question, let me I'll answer it this way and how we would have approached it. So we look at what we call it a talent to value approach. So we look at where those value of the future lie, what areas of our organization. And then do we have our best talent aligned to these areas of high value? If the answer is yes, you know, then that's okay. But if the answer is no, then we expose the gaps and we lay out an action plan to fill that. And I deliberately underline talent, because this talent is not, we have not gone about it the way we say, oh, we need an accountant or we need, you know, somebody in operations. But what are those skill sets, competencies, and capabilities that will make us future-proof? And so the talent of the future, we're looking for persons who are intellectually curious, that's one. They're adaptable, they're flexible, and they're motivated to deliver on customer outcomes. So I think if I should look forward, if I had a crystal ball, I would say that, you know, I am seeing where a bank of the future will have a high proportion of engineers, design professionals, UI, UX people, data scientists, but more importantly, multidisciplinary teams working together. I am seeing a very flat, non-hierarchical, you know, organization. And I am also seeing, you know, where the talent is purpose focused or value focused. Yeah, so that's what I'm seeing. where employees are more entrepreneurial, and focus on customer outcomes in a collaborative way.
Fantastic. I certainly think that this panel has shone a lot of light on areas that would be critical to us within industry. Gentlemen, thank you so much for spending time with us this morning, for sharing your thoughts and insights. I am certainly hopeful that you will be able to join us again, if even in brief part this afternoon, when we speak to the regulators who are meant to be there in driving leadership or regulation for transformational banking. And of course, you understand the flow of our conversations today. And then we culminate, of course, with what you also identified as one of those must-have innovations, and that is a focus on cybersecurity to wrap us up. So gentlemen, thank you again so much. I truly have enjoyed our discussions this morning, and I'm sure that I speak for our audience as well. Please, I hope to see you back this afternoon just for a few minutes. And I'm sure that our audience would love to speak with you as well. Thank you again. Have a wonderful afternoon, everyone.
Thank you very much. Okay, guys. Thanks.
Bye-bye, everyone.
All right then. Bye-bye.